Hey guys, this is Andre from the Trading Crew, and on this channel we're looking at stocks I love, stocks you love, and most importantly, stocks nobody should love. So on this episode, I'd like to cover the technique of selling and rolling a short put. If you guys remember, or if you've watched the video, if not, please head out and have a look at that one first. But basically, my Bitcoin video from earlier this week was talking about what I plan to do, which was to sell a put option on Mara at around the $16 price point. So I went ahead and did just that, and presto chango, within a few days Mara went through the roof here. It actually made somewhere around 15% ever since we opened that 15% gains ever since we opened that trade. So with that happening, I went ahead and decided today to roll my short put, and I want to walk you guys through why I did that as well as what happened there. So first off, what happened with the first one? Obviously the first one got into profit territory, and actually we closed it out at 60% profit. The usual profit taking range for a short put in the trading community would be between the 50 and 75% range for most traders. That said, I've heard people do it at 90% as well, so definitely try to find what works best for you guys. There are two cases that I take into consideration when deciding to roll a short put. So the first one here would be that the option gets too far out of the money. So what happens when the option gets too far out of the money is basically delta as well as gamma are the highest, the best when you're at the money. So obviously with the option going quite far out of the money here, we went from I believe 25 delta all the way down to what it was earlier today, which looks like an actual 0.08 delta. So obviously delta is sort of the speed at which you're gathering money as that stock moves. So usually what the reference is here, that for example for a 70 delta, you would be making 70 cents for each dollar that stock rises, and losing 70 cents for each dollar that stock loses. So with Mara here, what I decided to do is to move it out in expiration 1 week, and then move it back to a delta of around 0.25. I don't fully recall what I used this time, but I always look at a delta between 0.3 and right around 0.22 is the lowest I usually go. So that would be the first part here, the delta part. Now, if delta is sort of speed, you can consider gamma as acceleration. So as you go further and further out of the money, gamma also dials down. So again, you're facing the same situation where although you think that if you stay in the trade for a few more days, time decay theta is gonna eat up at that option and give you that extra boost. Well, it will definitely, but if you've already reached 60% in like a couple of days, the way it happened here, there's no point in waiting further, because you're gonna find that the next few dollars are really gonna take a while to collect there. And from my point of view, I would rather lock in profits and just move on to the next trade, whether I choose to roll it, whether I choose to cash out and just go ahead and move to the next stock that I've identified and would like to do the same thing on. So that would be my 2 cents on this first reason why I would roll a short put. Again, it would be if the option gets too far out of the money. The second reason why I would consider rolling the put would be if we've already squeezed enough time value out of the put. So time value is theta, and you guys already know that I like opening short put positions in the 30 to 45 day range. I usually aim for the high 30s rather than going into the 40s. I find that theta isn't as ramped up in the 40s as I like it to be. So if you've opened it in day 35 and then wait up until usually a couple of weeks out, that's when you get the most impact out of theta. Obviously, theta is is exponential. So the closer you get to the expiration date, the bigger the chunks it takes out of that option price. But the thing is that as you get closer and closer to expiration, gamma gets higher and higher. So with gamma getting higher, if you're say 1 week out and the stock moves against you by a slightly more considerable margin, then you can find yourself with profits wiped out that you had in hand just 1 week earlier, which is also the case quite often, and it's also the reason why I choose to just roll out if I'm getting closer to that 2-week range, especially if I again find myself in that 50 to 75% profit taking scenario. So those would be the main 2 reasons why you would choose to roll a short put. Obviously, the short put is the first step in the wheel strategy, a strategy that I often trade and definitely often encourage everybody to trade. I'm gonna post a video about the wheel strategy really soon on the channel here, so look out for that. Please, if you took anything out of the video, like, subscribe, and leave a comment below. Let me know if I can do anything better, and if you'd like me to break up any stocks that you specifically are watching nowadays. Cool, that would wrap it up. Take care, guys. See you next time. Bye-bye.